Ford reported earnings this morning. Earnings were down 57%. No surprise here. What was one of the big problems? Well, Europe, the global economy, all those things that are affecting everyone else are affecting Ford too. What does this say about the auto industry, which has been a bright spot in America right now? Mike Ramsey is here with us to talk about it. Mike, this was not a huge surprise out of Ford, right, that earnings were down?
No, I think that my read into the Ford earnings is what the company's stance about what they're going to do in Europe. That's really what the most important thing is to read out of this. The results actually came in a little bit better than people had expected. The losses in Europe were actually lower than they expected. But what Ford came out and made very clear, and it's obviously intentional, is that they don't think that this is a cyclical problem in Europe.
Right.
They're laying the ground for a restructuring. Other companies have already made actions there, and now they're being more vocal about it, saying, you know, we don't think this is coming back. We don't think that we can be saved by a volume increase. We have to, do something for the long term. And look, we've done this before in North America. Look, North America is making $2 billion profit per quarter and record margins. We can do this in Europe if you let us. So I think that the thing that might be seen here, and you're seeing with other car companies, is that the situation in Europe is so bad, and that the forecast for it not improving is so long out, that you might have finally reached a tipping point where structural changes will happen in Europe, where it just has been virtually impossible for decades.
Yeah, I thought it was very interesting. In their release, they said, we don't see Europe turning around for 5 years. And I think a lot of people would sort of know that implicitly, but not many people have come out and sort of said that explicitly. 5 years, not a shock given what's going on. I just thought it was very interesting that they came out and put an actual time frame on it.
Well, and if you look at what their goals are, it's not in their, if they want to close a plant, and they have 5 plants in Western Europe, they have overcapacity like every other car company. If they want to close a plant, they can't say that the problem will be gone in a couple of years, because, if the market turns up in a couple of years, then reasonably the governments can come back to them and say, well, we can, figure out a way to make this work. But if it's 5 years down the road, then you can say, look, this problem can't be solved quickly. So I think that they're being honest about it. And I think that the other car companies are going to all line up and say, we've got to do something to fix this. Look at North America. Look how well they're doing now. Now they're hiring again, and creating jobs. We have to solve our cost issue.
Right. Now, GM reports the beginning of August. What is the read-through right now from these earnings to GM and to the North American auto industry?
Well, I think you're going to see a very similar situation with GM. Their losses from Opel are going to be significant, although it's hard to know whether they'll be greater than Ford of Europe. A lot of this has to do with, how much they're spending on marketing, how much they've cut capacity, and but that said, the losses are going to be bad. GM has not done as much restructuring in North America as Ford. They haven't. Their pre-tax operating margins in North America in first quarter were not nearly as good as Ford's were, and Ford basically is just further ahead in all kinds of things. So my guess is that GM is going to make pretty good money. It just won't be, for a larger company, it just won't be as good on the margin side, and the losses in Europe obviously hurt them just like they do everybody else. So I think that you're going to probably see a very similar result as to the first quarter.